Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy dividend stocks that you can buy and hold forever. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're looking at dividend paying companies that include a couple Dividend Kings and Aristocrats. This means that they've been paying and increasing their annual dividend for more than 25 years for Aristocrats and 50 years for Kings. So we're going to take a look at these companies, what it is that they do, and how the analysts weigh in on their stock. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's dive right into these 3 strong buy dividend stocks. The first company we're taking a look at today is Parker Hannifin. Their stock trades under the ticker PH and is currently priced at $327 per share. Parker Hannifin pays a quarterly dividend of $1.03 per share for a dividend yield of 1.2%. Their last ex-dividend date just passed on November 9th for a payment date on December 2nd. This is the company's 286th consecutive dividend payment, and they've been increasing their annual dividend for 65 years, making them a dividend king and one of the top 5 longest-running dividend increase records in the S&P 500. Parker Hannifin is a global leader in motion and control technologies. For more than 100 years, the company has engineered the success of its customers in a wide range of diversified industrial and aerospace markets. Parker's engineering expertise and broad range of core technologies uniquely positions the company to help solve the world's greatest engineering challenges. 2/3 of their revenue comes from customers who buy 4 or more Parker technologies, and 2/3 of their portfolio enables clean technologies. Parker Hannifin's most recent quarterly earnings report just came out on November 3rd, and they came in well ahead of analyst expectations. Their sales came in at $3.76 billion, which was up 16.5% year over year. Both their net income and earnings per share were up 40% year over year. Their adjusted earnings per share of $4.26 easily beat the analyst estimates of $3.69. Following their solid earnings report, we heard from 5-star analyst Joel Tiss from BMO Capital. The analyst cites the company's standout features that include the ability to surpass expectations from ongoing margin expansion while also creating greater earnings stability. Tiss is positive on Parker Hannifin as a top pick for a highly liquid and diversified business. He is one of 11 analysts that currently have a rating on the Parker Hannifin stock, and it does come in as a strong buy based on 9 buy ratings and 2 holds. The average price target comes in at $378 per share, which would be an upside potential of over 15% for the next year. Looking at the most recent ratings, on the low end we do have a hold with just a slight upside, and on the high end we have a price target of $458, which would be a growth potential of over 40%. The second company we're taking a look at today is Johnson & Johnson. Trading under the ticker JNJ, their stock is currently priced just above $163 per share. They pay a quarterly dividend of $1.06 per share for a dividend yield of 2.56%. Their next ex-dividend date is coming up soon on November 21st for a payment on December 6th. Johnson & Johnson has had 59 consecutive years of dividend increases, making them a dividend king. Johnson & Johnson provides healthcare products across 3 main segments: consumer, pharmaceutical, and medical devices. These include some very well-known brands like Aveeno, Rogaine, Neutrogena, Splenda, Acuvue, Tylenol, Benadryl, Band-Aid, Listerine, and many more. Johnson & Johnson has over 135,000 employees who serve over 1 billion people per day. They shared their most recent quarterly earnings report on October 18th. They saw total sales growth of 10.7% to $23.3 billion and adjusted earnings per share of $2.60, which increased by over 18%. The company also increased their 2021 full-year guidance. Their stock currently has 6 analyst ratings and comes in as a strong buy based on 5 buy ratings and 1 hold. The average price target comes in at $196. That would be growth potential of almost 20% for the next year. On the low end, we do have a hold rating from 2 months ago, which would still have an upside of over 14%. On the high end, we do have a $215 price target, which would be growth of over 31%. And last but not least on our list today is Walmart. Trading under the ticker WMT, their stock is currently priced at $148 per share. They pay a quarterly dividend of 55 cents per share for a dividend yield of 1.47%. Their next ex-dividend date is coming up on December 8th for payment on January 2nd. Walmart paid its very first dividend back in 1974 and has been paying and increasing annually ever since. This makes them a dividend aristocrat at 47 years, just shy of the 50-year mark to become a king. Of course, Walmart is known as the largest retailer in the world. Each week, approximately 220 million customers and members visit approximately 10,500 stores. In 2021, Walmart has launched Walmart Plus, Curbside Pickup, Walmart Connect, and Express Delivery. Just in the Walmart US segment, they've seen $29 billion in net sales growth and a 79% increase in e-commerce and over 1.5 million home deliveries each week. Walmart's most recent quarterly earnings report came out back on August 16th. Their next is coming up soon, around November 15th. In their second quarter, they had total revenue of $141 billion. That was up 2.4% year over year. Their adjusted earnings per share came in at $1.78. That was year over year growth of over 14%. One analyst weighing in on the Walmart stock ahead of their next earnings report is Rupesh Parikh from Oppenheimer. For their upcoming report, he expects another beat and raise and believes the company is well positioned against this holiday season. Recent data suggests strengthening momentum in the grocery category, fueled by accelerating food inflation, especially in the fresh category. Walmart remains a top pick for Parikh, who believes shares set up well into 2022. He is one of 23 analysts that currently have a rating on the Walmart stock, and it comes in as a strong buy based on 19 buy ratings and 4 holds. The average price target comes in at $173 per share. That would be an upside potential of 16%. On the low end, we do have a hold rating with a 4.5% upside, and on the high end, we have a $196 price target from Goldman Sachs, which would be a growth potential of over 31%. So there we have 3 strong buy dividend paying stocks, all being dividend kings or aristocrats. Now, I always love hearing from you guys, so make sure you let me know your thoughts on these 3 companies in the comments down below, and what other dividend stocks are some of your favorites. I know there's some really solid dividend companies out there. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.